I want to thank you for joining us for this webinar on what's next with COVID funding and reporting. My name is Carissa Miller. I'm the Program and Communication Specialist for Montgomery County Medical Society. Before we do begin the program, I want to wish all the physicians who might have joined us today a happy Doctor's Day. I hope you're celebrating it in your practice. We just want to thank physicians for all they do. So I do have a few Zoom housekeeping items before the program starts. We have muted everyone upon entry into the meeting for sound quality purposes. If you're on the phone, you can press *6 to unmute. And then if you're on your computer, you can use that black bar, the little microphone symbol, to mute and unmute yourself. We do welcome your questions. You can also submit them via the chat feature throughout the program. So today's program will focus on the status of PPP, PPP2, and PRF, so Paycheck Protection Program, the second round of Paycheck Protection Program, and then the Provider Relief Fund, and the compliance your practice should be aware of to make sure you're leveraging and reporting on these funds appropriately. Our presenters will also provide insights into the next phases of reporting, including single payer financial audit requirements and random government compliance audits on money received. Our speakers today are Maureen McCarthy, CPA, Managing Director, and Deborah Nealon, Senior Healthcare Consultant of Medical Business Advisors, a division of Katz Abosch. Thank you both for being here today.
Thank you, and thanks everybody for joining us. So I wanted to start this by saying my goal for today is to make you some money and to keep you out of trouble. Both equally important tasks. So that's really the focus of our conversation today. And hopefully, like I said, we will give you some insight into some COVID money that you haven't been able to tap yet. So as Carissa said, we have three topics today. We're going to talk about the PPP and PPP2 and kind of where that stands and the reporting for that, which is either in progress or has already been done by your practice. We're going to talk about the Employee Retention Tax Credit, ERTC, which what I found at a recent presentation, a lot of people are not necessarily aware of and haven't applied for it. And then last, we're going to talk about the provider relief funds. There's a new tranche out, so that'll be the fourth. There's reporting that has already passed. There's reporting that's coming up. And like I said, there's a new tranche that you can apply for if you meet certain criteria. So that's the agenda for today. I'm going to start with PPP in general. So the loan forgiveness applications are coming due or are past due. So the way that the reporting period works is if you got a PPP loan in the initial tranche, we'll call it, from the time you got that money, you can either report on an 8-week period or a 24-week period. Obviously, 24 weeks is great because it's not difficult to come up with the expenses to justify loan forgiveness. So once you decide what your reporting period is, if it's 24 weeks, you have 10 months after the 24th week to file for forgiveness. So for some of you who got PPP money in the early stages, April, May, June, you may have already reported, you may be late, but that's the timeline for that. If you got PPP2, which a lot of practices did, it's the same criteria. So from the time you got the money, you can report on an 8-week period or a 24-week period, and then your loan forgiveness applications are due within 10 months of the end of the covered period that you chose. So most practices that we work with, they've already applied for PPP loan forgiveness. They've gotten it, they're on their way. PPP2, most practices are in the process of filing for that or getting ready to file for that. So some good news, if you received a PPP loan up to $150,000, there is an abbreviated reporting form, 3508S, that you can use, which makes it a lot easier. For loans over 150, the reporting is much more comprehensive. Under 150, it's an abbreviated form. The documentation that you have to submit is much less than you would need to submit over 150, et cetera. Second piece of good news for small practices who got loans that were 50,000 or less, they're going to use the same form, the 3508S, but you don't have to submit any documentation with that. You don't have to attach any files to that. So that makes it easier. And in some cases, it allows you to submit it yourself rather than asking for assistance from your accountant or your other advisors. So just a warning, if you miss your deadline, if you go past the 10 months, you may see that the bank starts to pull loan payments right out of your account. So don't distress. Once you get your paperwork in, once you are granted the forgiveness, the bank will return that money to you. You can talk to your individual banks about that, but the money is not lost, but it certainly, you don't want to get to that point where you're past due in filing. So that's the PPP and PPP2. Now, this is the exciting one in my world, which is pretty sad that I get excited about a tax credit, but that's what we do here at Katz Abosch. So the employee retention tax credit is a wonderful way. If your practice sustained losses in revenue in 2020 compared to 19, or in 2021 compared to 19, and you kept your employees on like they wanted you to, and you paid their salaries and therefore their payroll taxes, this allows you to
yeah, but we have to go through your 21.
I'm sorry, I heard someone talking. So this allows you to do a test, two different tests. The first test is if the practice experienced more than a 50% decline in at least one 2020 calendar quarter compared to the same quarter in 2019.
I know. Okay. But
you will be eligible for a tax credit. So what I suggest is that you take your QuickBooks and you map out your revenue by quarter for 2019, 2020, and 21. That's the easiest way to decide if you are eligible for this tax credit. So comparing 20 to 19, if you had a 50% decline in any quarter compared to the same quarter the prior year, you are eligible for this employee retention tax credit. Or there's a second set of criteria. So if you are still experiencing lost revenue, low revenue compared to 19 in 2021, if you see a 20% decline in at least one quarter in 2021, when compared to 2019, you're also eligible for this tax credit. So like I said, if you map out your revenue by quarter for the 3 years, it's very easy to judge whether you qualify for this. And like I said, there's two criteria. So you can go 20 to 19, and then you can look at 21. The 21, the second part of this, the 2021, is for practices who haven't yet recovered. And I think that's really a great thing that the government is doing, because there are practices who haven't gotten back to their 2019 productivity. So this allows you to get a refund on some of your payroll taxes. So let's talk about the credit. The credit is based on payroll and is claimed by amending your 941. So your 941s are your quarterly payroll returns that have to be filed on an obviously quarterly basis. You may not do these. You may have a payroll company that does these. You may have an accounting firm that does these. But those forms, in order to get your credit, are going to have to be amended to show this this lost revenue and to change the amount of taxes that you should have paid in versus what you did pay in. So for 2020, the credit is 50% of wages paid in eligible periods up to $10,000 per employee. So what that really means is that you take the $10,000, you multiply that by 50%. So the maximum refund is $5,000 per employee per year. So if you have 20 employees, that's not an insignificant amount of money by any means. Even if you have 10 employees, it's still certainly worth having someone help you prepare this. So for 2021, they've actually made it even richer. They are giving a credit for 70% of wages paid in eligible periods, which is the 3 quarters in 2021, the first 3 quarters. And the credit can be as high as $10,000 per employee per quarter for 3 quarters. So again, if you do the math that we just did, that's a substantial amount of money. And like I said, we've had practices get back $15,000, $20,000. We have practices that have gotten back over $100,000. So this is a real credit. And the good news is it's called a credit, but you're actually going to get a check. It's not going to be a credit that's applied to your tax return or anything like that. You're actually going to get a check, and you will get a check for each quarter that you amend. So you could get 6 checks, and it could be a substantial amount of money. So for those of you who are not aware of this, or for those of you who haven't done this calculation yet, I really encourage you to do this as quickly as possible. The deadline for this is pretty far in the future. So the deadline is 3 years after the original due date of the quarterly tax return. So if we are amending a second quarter 2020 payroll return, you have 3 years from the due date for that, which I don't do payroll anymore, but I think it's 4/30. So 4/30/23 for a quarter in 2020. So you still have time, but I would encourage you to do this as soon as possible and get the money in your bank account. So
That's what I can imagine.
okay, now we're going to jump to the Provider Relief
But
Fund.
it's actually not the 2 of them that are.
So the Provider Relief Fund came about in April of 2020, and we all know that we were locked in our houses in April of 2020. And I received a lot of calls from clients, from doctors saying, "Hey, I just got a check for $10,000 electronically in my operating account. I got a check for, somebody got $400,000. It was one of the calls, and I don't know what this is for." Well, HHS allocated this money, and they based the first check on Medicare payments received in 2019. So if you had a heavy Medicare population, you could have gotten a very, very large check in your account. Some practices who don't see a lot of Medicare patients got smaller checks. So that was the first we found out about this Provider Relief Fund money, this HHS stimulus money. After that, they published some information about practices applying for money if they didn't get any money in that first round. So there was an application, you had to fill out your revenues, some of your expenses. I mean, it was a long, not a terribly long, but a longer form where you had to provide them with information. And then you would submit that, and then they would send you money. And what we saw during this time was that practices were getting about 2% of annual revenue. That's what the PRF looked like. And some of them got it in 2 different checks, and some of them got it all at one time if they applied for it and hadn't received anything before. And then there was a tranche 3, which included all kinds of different providers. And then there now is a 4th tranche, which is based on need. It's for practices who really haven't been able to recover. And it's also for practices in underserved areas. So, the 4th tranche has recently opened, and we're gonna talk about that a little bit further on. So back up. So the PRF funds that were received could be used for any healthcare related expense. So we did, some research on this and made some phone calls and looked around, and in a medical practice, everything's a healthcare related expense. And so there are some expenses that obviously are medical expenses, like medical supplies, vaccines, lab, those kind of things. But every expense is a healthcare related expense when you're talking about a healthcare practice. So these PRF funds were allocated to practices to use for expenses that were not covered by their PPP money or any other grant money that they got, or EIDL or any other government money that they got. So basically, when you report, you're going to find that they're asking you, what were your excess expenses after the PPP money, after the PRF money, et cetera. So they want to make sure that you really did have a need for the money, which I haven't met a practice yet who didn't have a need for that money. So that's what they wanted that money to be used for. There was a second stipulation when you applied that the funds could also be used towards lost revenues. We have not had to, we've helped a lot of practices file their reporting. We've not had to go to the lost revenue categories because the expenses far exceeded any government assistance that most practices got. But there is that other safeguard that if you don't meet the criteria with your expenses, you can look at lost revenue. So now I'm going to turn this over to my associate, Deborah Nealon, and she's going to talk about the different tranches of PRF and some of the reporting requirements.
Okay. Oh, I'm sorry. Can everybody hear me? You may have to mute.
I am.
Okay. Sorry, folks.
Sorry, we're having some
Technical difficulties. We're in the same room.
Carissa, can you mute Maureen?
You are muted. You might try turning off the sound on your computer.
Got it.
Okay, sorry, folks, we should be good now. Each funding distribution was followed by a reporting phase. And in phase one, you're reporting on dollars received for the period April 1st, 2020 through June 30th, 2020. And you were due to report those funds by September 30th of 2021. They did allow an extension until November 30th of 2021. But you needed to register on the portal early in 2021 and then complete the reporting for sources and uses of funds by the deadline directly on the PRF portal. For practices that received $10,000 or less were only required to register. They did not need to report on those funds. If you failed to report during this period, you most likely received a demand letter stating that you will be required to refund those dollars within 30 days. We have contacted HRSA, and the folks at the PRF hotline have informed us that they're not going to require you to return those funds immediately. They are working on an appeal process and are urging providers to follow up on the website for the latest updates on the appeal process. And I checked it today and there still isn't anything up there. So stay tuned. Next slide. Now, phase two, you were reporting on the dollars received during July 1st, 2020 through December 31st, 2020. And you have until March 31st, 2022. There is no extension for this reporting phase. And again, if you received less than $10,000, you only needed to register. There is no reporting required. If the money was received in both phases, each amount must be reported according to the quarter in which they are received. Now we created this handy grid to help everyone keep track of when funds are due to be reported on. So I would urge you to just keep this handy. Now, when you complete your forms on the portal forms, there's about 12 pages. Every cell on each form must be completed to move forward to the next form. So if you do not have dollars that you need to report on in a particular cell, enter a 0 so you can move forward to the next form. Some information will be auto-populated when you register on the portal and attest to the funds that you received. There were 3 forms that may give you some difficulty that we've encountered. So the first one is when you need to identify your PRF money when it was expended by quarter, and you also need to break it down into 2 categories, general and healthcare related by quarter. And again, this form is only for PRF money that was expended. The next section was unreimbursed expenses. Now these are expenses recorded per quarter, and again, broken down into the 2 categories, general and healthcare related. And these are expenses that were remaining after you had applied PPP funds, any kind of government grants, and your PRF money. So any remaining unreimbursed expenses will be recorded on this form. The third form that we found a little bit difficult had 2 parts to it, and it's a matrix of employee statistical data that you need to break down by quarter. And it's broken down by clinical versus non-clinical, part-time versus full-time, the folks that you furloughed, terminated, and hired during these 10 quarters. The second part of this form is your patient information. And you needed to report on hospital admissions, ER visits, and your outpatient-based encounters as well. The hospital admissions and your ER visits, you can most likely get that from Chris. And if you run a report for the encounters out of your EMR system, then you'll be able to get that data for that piece of the matrix.
Includes virtual visits.
Yes, thank you, Maureen, for reminding me. It does also include virtual visits.
I'm going to turn my sound on. Okay.
Maureen, you're on mute. I'm sorry, we still can't hear you. Do you want to try turning your computer audio back on as well? Not yet, can't hear you. Do you want to unmute Deborah then?
Yep. Okay. Carissa, can you hear me?
I can. You have an echo.
How about now?
Sounds good.
Okay, I'm so sorry, everyone, for this technical. We thought it would be easier if we were in the same room together with two different computers. So the next phase of reporting, phase 4 tranche, this became available in September of 2020. And when they first started talking about this, they talked about this being for practice. To tell you, I just saw the other day that one of our PEDS practices got $125,000. So I'm going to encourage you to go ahead and apply because I don't think it's terribly difficult to apply. And if there's money out there, I think it would be, great for providers to have that. So this is a list of the eligible providers. So you see in the first bullet that this includes practices who participate in the Medicaid program, the CHIP program for 19 and 20, dental service providers who may not have applied before, providers who do Medicare fee-for-service and Medicare Advantage, see those patients. Assisted living facilities, which I don't think applies to anyone on the line, but that was opened up in this tranche. And then behavioral health providers. Now, we all know that behavioral health providers have really been stretched to the limit during COVID because so many people have felt the strain of COVID and the changes in our lives. So good to see that they're in here. And then providers who received a prior targeted distribution payment. So this is pretty vast, but it does open it up to maybe some providers who hadn't been on the list before. So let's go to the next slide. So again, this is the practices in need, practices who are in underserved areas. These are 3 criteria for providers that meet these descriptions. So again, we don't work with a lot of FQHCs, but I know there are parts of Maryland where there are FQHCs, so we wanted to include this slide. So let's go to the next one. So I wanted to bring to your attention 2 different requirements, deadlines that you need to monitor. The first one is the government has put a single payer financial audit requirement on practices who received more than $750,000 in provider relief funds, HHS stimulus funds. It also, we believe, and we're still trying to track down the definitive answer on this, it also may include grants. Let's say if you got a $150,000 EIDL loan, the first $10,000 was forgiven and was treated as a grant. We think that probably needs to be included in your calculation of how much the amount of the total funds that you got. And it could include other grants as well. Most practices did not get anywhere near $750,000, and so they won't be affected by this. I will tell you that you need to have an accounting firm do this single payer financial audit. It's not going to be inexpensive because audits are not inexpensive. So I'm hoping that most of you don't meet the criteria, or I hope that you got $749,000. So that's the first part. And then the second part is, so we belong to an organization called the National Society of Healthcare Consultants, and we've been getting email requests to help them with audits of the PRF money. So we are concerned enough that there are going to be random audits on the PRF reporting. And I just wanted to make everyone aware of that. I know that these forms are not easy to understand. I know that sometimes the data that you need to put on them is not easy to retrieve, but I want you to make sure that whatever you put on the forms, that you keep the backup together and that you print out what you reported or save it electronically so that you have all of that information together, just in case you're chosen for a random audit. I don't believe practices that, received small amounts will be in this audit, but I do think that some of the larger Medicare-based practices could possibly be audited. So I just wanted to let you know that that's out there and that you should, have a solid packet of information that you use to put together your reporting forms. So that's the seminar for today. We are available for questions. The reporting period for the reporting deadline for period 2 is tomorrow. So if you have questions, if you've got a couple more things to fill in on your forms, I mean, we are here and available, and we are in the office. So you can give us a call. Here's our contact information. We thank you very much for joining us today. We hope this has been helpful, and we hope that you go out and file your ERTC tax credit forms and get some additional money. So let's open the floor to questions.
Hi, Maureen, can you guys hear me? This is Joe
Yep.
Sue. Hey, thank you for your help over the years, not just the last Corona years with this stuff. But I had one question I put in the chat box. When we went into our CRISP data for the Provider Relief Fund HRS money, like phase 3, I guess, the one that's due tomorrow, we could only go back like 6 months in CRISP for some reason. I don't know if that's our own practice, but I ended up just using one of our hospitals' data. Anybody who has privileges, they track your utilization or something for inpatient. It's not great. The numbers don't, I know it's missing stuff, but I didn't know, were there any other ways people were trying to get hospital data and ER data, or did anybody else have trouble with CRISP? Because we went back, they said they can only go back 6 months, and we're trying to do 2020, 2019, 2021.
I'm going to open the floor on that. I will tell you that the practices that we helped them complete their reporting forms didn't seem to have trouble getting their CRISP information and going all the way back. So I'm wondering, did you pick up the phone and call them? Because maybe there's a trick, but let me open the floor and see if anybody else has the answer to this question.
Sounds like no, maybe, but well, one thing
Sure.
I don't know if some people like import their CRISP data quarterly and then it gets put in their EMR and they have it, because we don't really do that routinely. Do you know what I mean? It's kind of like which one of your patients went to the ER, and then they know to like get stuff. I think one of the problems was, how the Department of Health got hacked or something. I think that was also an issue with some of the technical help or something. I don't know if CRISP is Maryland Department of Health or it's separate, but I think we tried calling people there and they were saying for some reason we can only go back so far. So I didn't know how other people did it, or if they collect it in real time and they have it. Do you know what I mean? Versus like trying to do it now for 2019 and 2020.
So Joe, let me ask you a question. Do you admit these patients, or are they admitted to the house?
So we see newborns. And so they usually come under our name until COVID hit, and then we stopped rounding. And so and then the patients who do get admitted or go to the ER, admitted, let me say, go to the hospital service like at Shady Grove. And then if you're listed as the PCP, if they ask for that information, then they can track that. Because I did get the medical staff to like run a report on each doctor's patient contact encounters or something. But it seems like there should be more patients there. It's not complete, but that was the best thing I could do. I think that was from your September webinar or something like that back in the day, that said maybe if you only use one hospital, try to see if you can see if they can do that data.
So I would say that if you are not the admitting physician for these patients, that you should put zeros.
Oh, they only want, okay. It's like whoever's the attending of record or the managing those patients.
If you are not the admitting physician, I think you can put zeros. That section of the form is really for informational purposes only. What they're really looking for from an outpatient-based practice is the number of encounters, because they're trying to see what the fall off was in second quarter 2020 and if it rebounded. So I would focus more on your outpatient encounters. And if Chris can't give you the information, I wouldn't worry about it too much. I really wouldn't. I just put zeros in.
Okay, yeah, I mean, we definitely have the outpatient encounters through our EMR stuff, you know, like how many patient visits or claims or whatever. But the ER, the admission one data was much harder to give a real number, you know, in that sense.
Right.
Okay.
I don't think you need to grieve about that too much. I really would put zeros in because you're not probably usually the admitting physician. You aren't on the newborns, and you probably aren't if the kids are admitted through the ER. So.
Right. Okay.
Yeah.
Second thing, that the phase 4, do you know if people have gotten money for the ERTC credit? Because I think I did that, and our paychecks person said they did a 941X or whatever, the amended one, but we haven't. Are we supposed to just get like some magical deposit into our bank account with that says U.S. Department of Treasury or something? Or how do we, there was no way to follow up, he said, besides calling the IRS, which is like impossible now.
So I can get back to you and tell you exactly who the check's coming from. I'm thinking it's coming from the IRS, but I will, I'll find out. But what I'm hearing is people are getting checks, actual checks.
Okay, so something mailed to their office, maybe something like that.
Yep.
Okay. Because
When did you file it?
Like October 21, I think.
Oh my, you need to call and follow up on that. Yeah.
Okay, because I think we did the thing. I'm sorry, I was in and out of the thing, the webinar. Like there was the time when they shut down the practices, Hogan, from March, whatever, 16th or something, and we could use that period as doing half your business or decreased volume or something like that.
Right.
And,
yeah, you need to follow up on that. You should have received a check already. I have practices who just submitted in January who already have their check. So it's
Okay.
it shouldn't take that long. So I would follow up on that. You have 3 years to file it. So, you know, you still could refile it if it wasn't received.
And last thing, sorry, I don't mean, I think we did the phase 4 and we still haven't heard from them. Do you know when that money comes through? You said some people already got money for that.
Yeah, that's taking a little bit longer because they have to process all your information and everything. When did you submit that?
It was I don't know, it was last quarter. I mean, it was in 2021.
I would follow up on that too.
Okay. All right, thank you.
Because I have practices who submitted in late September, early October, who got their money in December. So,
Okay.
yeah. So other questions. So the name of the form for PPP and PPP2, you get those from your bank. You should get an email, or you should have gotten an email from your bank saying time to report now. And you go in there and it's usually online. So I would call your bank if you're trying to file for forgiveness.
Oh, can I ask, oops, am I still on?
You are.
Yes.
Okay. Can I ask you one more question? So you do your PPP, you get it approved, you get it forgiven, and then the SBA wants to do a review. And have you seen people had to pay back money if the loan calculation is less than what you got?
I haven't had anyone not get total forgiveness. But usually they get back to you pretty quickly and tell you whether you meet the criteria or not.
Right. No, we were forgiven, but then the SBA actually pulled and wanted to review it.
Okay.
And had to recalculate the whole loan. And if it was less than, you had different criteria to calculate them. You could do 2019, you could do 2020, you could do it different ways. And our Bank of America just looked at our 940s and just eyeballed it and gave us a loan, but they didn't take into account the people who made more than 100,000 a year. So it was a little bit more than we needed. So I think I had to calculate it all again and submit it back to them. It goes back and forth through Bank of America and the SBA. And I don't know where it's at right now. But if it's less than the amount you got, they'll probably ask for a repayment.
Well, or you can use other expenses, because you could also use rent, utilities. I mean, there were other items that you could put into the calculation. So I think that you you probably should identify a banker that you can work through this process with, because they know what needs to be done, and they're usually very helpful. I haven't worked with Bank of America, but they're usually pretty helpful.
Okay. Because I think were forgiven for what we spent it on, but their question was, did you ask for too much money based on their criteria?
Right. No, I get it. I get it.
Yeah.
Yep.
Okay. Okay. Thanks.
Okay, last call for questions.
So I have a comment that my practice was audited and had to give over $200,000 back. So Pam, was that based on the fact that you asked for too much money? Like, based on, if you don't mind me asking? No, that there was, she said it was based on asking for too much money. You know, it's interesting. I had a practice who asked for money based on their payroll, but they also included their 1099 contractors in the mix. And it wasn't, you weren't supposed to do that, but they justified their loan with rent and some of the other allowed expenses and got full forgiveness. So I would encourage you to look at that if they're taking money back before they take it, obviously, to see if you can justify it with other expenses. We do have a gentleman in our office who we call the PPP guru. He's now the ERTC guru as well. So if anyone has a question, you know, I can connect you. He's very helpful and very easy to talk to. So Carissa, I don't see any other questions, so I guess we can wrap it up.
Okay, I see someone just unmuted themselves. Did you have a question? No? Okay, all right. So I want to thank everyone for joining us today. We will make this webinar available online via our YouTube channel. Don't forget to subscribe to our channel for other educational content, including webinars on telemedicine, remote patient monitoring, and telehealth billing during the pandemic. I do have a couple of other things that I wanted to put on your radar. First is the credentialing survey that MCMS is currently doing right now. We would love to hear your feedback. I will include a link to that in the post-event email. We also have a spring networking event on Tuesday, May 3rd. We're going to be at Pinstripes at Pike and Rose in North Bethesda, so we're hoping that you'll be able to join us there. And then, of course, we are continuing to update all of our COVID-19 resource materials. So if you're looking for those, you can find them all at montgomerymedicine.org/COVID-19. Thank you all so much for joining us today, and I hope you have a great rest of your week.
Thank you, everyone.